What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. As usual, today I am taking a look at yet another Mogul listing. This is the Parker. It's another quadplex in Colorado Springs, Colorado. This one's actually a mix of units. It's two bedroom, one bath units, one bedroom, one bath, and one studio. Because of that, it makes it a little bit tough to figure out a value and understand, where their total rentals are. But a couple of things, they did mention that the appraisal's already in and that it's $25,000 above the purchase price. Because of that, I'm not going to spend a ton of time. I did pull up all of the third-party platforms, but I'm just not even going to spend a lot of time going into that. I think the appraisal that we already have, in addition to the fact that our other fourplex is also a comp, and I'm going to take a look at that one as well. But I will touch on it briefly. Let's see, what else do they tell us? That they're underwriting $63,000 in projected income, which is below the existing rent roll. And so I appreciate that as well. I mean, it's one of the things that I think conservative underwriting, you shouldn't ever just say, okay, this is what we're rented for, we're going to make 100% of that this month. So what's the downside? Well, it is, year one cash on cash yield is only 6.53% according to their underwriting. So relatively low yields. However, if you've been watching some of the videos about properties I'm buying on Arrived or Arc7, or Real Bricks, or pretty much all of the other platforms, we're not really getting much higher yields than this, especially on long-term rentals. There are some exceptions, but for the most part, this is still a pretty good yield, provided that we don't think that we're overpaying for the property, and we believe it's a market, right, that we want to be in, that's going to grow long-term. When I did the video on, let's see, what property is this? The Peterson, I dug into Colorado Springs, Colorado a little bit. You can go back in the Mogul playlist on my channel and see this. So this is the one, the other one that I was talking about that I'm comparing it to. You can see this investment hasn't sold out yet. And this was several days ago that was listed. I believe they're from the same seller. And actually, like if we look on the map, let's see. Our subject property is, let's see. Let's go back to our address. I want to make sure. Yeah, it's this 4321 Lachelle. Yeah, that's the first. So it's, oops, let's go here. So it's just right here. And the property that this one here is on Erickson Drive. So this is the one that's been listed for a little while. It's just one street over, right? So again, that should be a good comp. I also mapped out where all the other comps that they're using are. And so one is the other Lachelle Ave one is right nearby. But then there's these two Loomis properties, and you can see these are across a highway. They look relatively close, but to get to them, you actually have to drive up. It looks like this is the earliest that you can cross over that. I think this is a highway. Let me zoom in a little bit. Are those train tracks actually? Actually, I think those are train tracks. There's both, right? There's a road and train tracks. Yeah, so it looks like the first place you can actually cross over those tracks is all the way over here, right? So one of the things that you have to wonder is, are these other comps on the other side of the road? Oh, okay. Well, now I'm dragging that map around. Are these good comps, or are we, on the proverbial other side of the tracks? I don't think it's proverbial. They're the, I can't think of the word. You can tell. I'm always doing these videos when I'm super tired, and I apologize for that. This is just when I get to squeeze them in. But anyway, all the comps that they've picked are multifamily properties that are relatively close. Some of them are sales that are somewhat far back in time. But as far as I can tell, they're relatively reasonable comps. again, with the question of, are these ones on the other side of the railroad tracks really any good? But you can see when we look at these comps, this LaSalle Ave one, this is right next door. So the real question is, how much different should the price be, considering that we don't have 8 bedrooms, right? We have a studio and a 1 bedroom, 1 bath, which actually makes me, with 4 units, 2 2-bedroom, 1 baths, 1 bedroom, 1 bath, and 1 studio. So they're saying that the studio has a bedroom even though it's a studio. So anyway, comparing, so this is an 8 bedroom, 4 bathroom versus a 6 bedroom, 4 bathroom, and it's a little bit smaller. And it is much smaller than the 2 Loomis property. So this, using their analysis, yes, we are significantly below those, but it is, we have smaller units, right? 2 of our units are not 2 bedroom, 1 bath. Again, there is already an appraisal though, so that's, we got to keep that in mind. I'm going to get some easy stuff out of the way and then get back to that. So the flood map looks good to me. You can see there is a flood zone to the north of us, but it appears that we are just in a regular X, which is what I always want to be in. I was really happy with the crime map. This is going back pretty far, and let's see, back all the way to the beginning of February. So almost 2 whole months, or over 2 months, I guess. And we don't have any that are right here. You have some, again, all of those are on the other side of the railroad track. So maybe we actually have the superior location here. I think it's also possible, because of how they're just all grouped, it made me wonder if, sometimes I get worried that there's a reporting problem, right? Like, is whoever's responsible for policing this area not reporting in a way that spot crime picks it up? I don't know the answer to that, but at least based on this map, it looks like this is a decent area from that regard. I did spend a little bit of time just looking on the, just walking around using the Google Street View. I wasn't sure what this building is that we've got going over there. I'm sure somebody who spent more time on this could let us know. You can always, share info in the comments or in the Discord. I know a lot of you have been helping out in there. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on all of those platforms and on any of the properties that you see me talk about. Just because I do or don't invest in those properties doesn't mean it's the right answer for you. You want to understand, the risks yourself and whether or not it meets your investment goals. I'm just trying to share my experience, how these things go for me, the way I'm thinking about them, what I'm doing, but not telling you, what you should do. Also in the description of this video, there's the Discord channel that I just mentioned, a link to it. There are 268 of us, last I checked, people that are all interested in fractional real estate investing. A lot of people are sharing information, insights, strategies about different platforms, about due diligence. There is no cost to join. It's not a sales funnel. I'm not going to DM you and try to get money from you in any way. If you get that, somebody who looks like me doing that, please report that person. It is a scammer. They're not actually in our server anymore, but somehow find out when people join and still send them DMs. So just keep that in mind if you do join, and please do, because I think the more that we can share info on these properties, the better. Okay, let's see. You can see. So this is why, when I'm saying the third-party websites, I mean, the Zestimate for this is $446,000, and we're paying $610,000. And they're saying that we have appraisal for $635,000. So, which is by saying that it's $25,000 over our purchase price. That's a huge difference. Now, Zillow and all of these platforms are not typically good at doing multifamily properties. Like you can see, okay, this just thinks this is a 2-bedroom, 1-bathroom home that's 900 square feet. It's not picking up the fact, it says it's a townhouse. It's not picking up the fact that it's a fourplex. So, I pretty much ignore when I'm starting to get data like that, I would ignore it. I think the same thing is going on here on on Realtor, although they do have the right square footage, but they're saying 6-bedroom, 5-bath. Oh, they do say it's multifamily. So I don't know how they're getting. I mean, this is an incredibly low estimate. If you even look at like the past sale, like it sold for $400,000, and and as was mentioned in the description, it's been fully renovated. Now it would be nice. I don't think when they said it was fully renovated in the past year. Yeah, and comes fully occupied with no lease. The no lease expiring before December of this year. So obviously, if it sold for that much last year, and then they put a bunch of renovation dollars into it, it should be worth more than that price, right? Not less. This is a time, though, it would be nice, again, if they gave us that full, description of the scope of work like they did on the last listing. We know they know how to do it, so hopefully they can start being a little bit more diligent about that and giving us, actual details. Because I think the more we can understand about the property, the better informed we can be when making our investment decisions. Yeah, and the same thing, Homes.com had a relatively low range. But then I used the Homes.com platform to actually pull up some sales. And this I thought was kind of interesting. So the Lachelle one I found, the 643. But then there are these two others, although they're like pretty far away, even though they're in the same zip code. So I think these are probably not great comps. These are the only other two that popped up. And then the Loomis properties. Sorry, this is the one that's far away. The Cheyenne one. Okay, no. So this is the Lachelle one, which is right, and then the Loomis one. This is actually our property. The Peterson, but it's the prior sale, right? It's not this current sale. So I thought that's okay. That's not really that helpful. We do know, that one we were paying, I think, $675 for. $675. But again, we have, the larger units. It's only a little bit more square footage, but the fact that you have 2-bedroom, 2 baths in every unit versus just in 2 of the units. But yeah, I think the Loomis sales were older, and that's why they didn't come up in here. Let's see. So let's close that. I did take a look at each of the listings, that they use for comps. I thought they seemed like relatively reasonable comps to use. I mean, obviously, these ones are much larger, but they also sold for significantly more. So, and it's really selling these properties on a per square foot basis doesn't make a ton of sense because the people who buy them are buying them as investors. And so one of the things that's interesting about rentals is, okay, when you sell single family homes, they're very much valued on dollars per square foot. When you rent a home, a lot of people don't pay nearly as much attention to the size of the units, right? They're just looking for a number of beds and baths, and they don't pay as much attention to the total square footage. And so sometimes if, they'll just be like the 2-bedroom, 2-bath units in a specific area will all rent for very similar dollar amounts, even if some of them are more spacious than others. Now, there's a little bit of variation based on the units, but it's not in the same way that you get on the sale side. And so even though there's more square footage here, I didn't do what's the dollars per square foot, and let's multiply that by 270. I wonder what you get when you do that. I think it's, or 2,700, I'm sorry, times 202. Yeah, I mean, that would say, okay, well, we should only pay $545,000 for this, right? Because I took that sale price, dollar per square foot, and multiplied it by these square feet. But I just don't think that's the right way to value investment properties. Typically, you're going to look at like your gross rent multiple, or you're going to look at like, okay, what's the market rent for the total market rent for these units relative to the other? Because that's how investors are going to be looking at these to buy things. So let's see, close those up. I did also look at, the Zillow rental averages, because I wanted to make sure. I think I talked about this in the last video too. So they're fully renovated units. Sometimes you get a little bit too much of a premium when you do a full renovation, have a really nice looking property, and then the second time that you lease them afterwards, you're not going to get that same sort of pop in rents that you get with the first time you do it after a renovation. So I wanted to see like, okay, what's their total market rents? How does that compare to what they're getting? So the 62,988 divided by 12, because that's their top line rental rate. So that gets us to 5249 total monthly rent. And we have to figure out, well, how does that stack up to the units that we have? So we have two bedroom units. There are 2-bedroom apartment units in this zip code 1659, right? So minus 1659 and then minus 1659 again. And then that means the other two units, if we were getting that rate, we'd only have to get less than 1,000 per unit. So we looked at, okay, well, what about 1 bedroom, 1 baths, same zip code? I came up with 1288, and then the studio 1,099. So like you can see, okay, those two numbers together clearly make up more than $2,000. So it seems like we're actually doing pretty good when you just compare them to average apartments of the same size in this market. But I did the same thing on Rentometer and just looked, but this kind of the zip code is pretty big, right? When you use it, so it always worries me a little bit to do that. But this looked a little bit different, right, than what we saw on Zillow. So this is, I believe I'm looking at the 2-bedroom ones here. 37. Single bedroom. It's just the single bedroom studio. Oh, I did the single bedroom twice. Oh, except that why is it giving me two different prices? I'm not going to go through and redo this while I'm on here. I think it's, even looking at just these single bedroom rates, it seems pretty clear that the rental rates, they're not like some exorbitant rent compared to market rents. Obviously, if I were going to buy a piece of this one, I might spend a little bit more time digging into those rental comps and making sure I really believe, that they are going to be as good as they say, or that when it comes time to release them. But the other thing that I wanted to mention, if I were trying to compare these two, okay, we look like we have a higher IRR and higher average or lower average yield. Oh no, sorry. Lower average yield and lower IRR than the Peterson. To me, that kind of makes sense, and I'm not sure. I didn't dig into comparing one to the other and figuring out where the numbers differ. But one thing, let's see if their interest rate was different, because interest rates have been moving pretty quickly. 5.99. No, using the same interest rate. Okay, I was just curious about that. So one of the things that I don't know that we would really pick this up anywhere in here. But whenever I have 1-bedroom, 1-bath units, or I have studios, I'm always expecting those to turn over more quickly than 2-bedroom units, and I expect 2-bedroom units to turn over more quickly than 3-bedroom units. Typically, the bigger your unit is, they correlate to longer length of stays. And it's because it's, the more space you have, the more stuff you're using to fill that space, the more expensive it is to move. And also too, once people have larger families, more people living in the property, again, moving becomes more cumbersome. So and sometimes you get some exceptions to that where you have retirees or something that are just using a studio or one bedroom and they'll stay there forever. But in general, I typically, when I'm looking at deals, underwrite a little bit more turnover in the smaller units. And now, obviously, that's something that you can look at in each market. It's tough to see with sort of these publicly available tools. Where I work and live, you could find a lot of that data on the MLS. I'm not sure the best way to go about finding. Well, I mean, you can use CoStar for apartment turnover and that sort of stuff, and vacancy rates, but I don't have a CoStar account anymore because it's extremely expensive and I wasn't using it enough. I think the last time I had it, I was paying like $400 a month for it or something ridiculous like that, and I just wasn't doing enough multifamily deals for it to make sense, especially where I have MLS access and can see tons of these rental comps. Anyway, that's kind of a weird aside. So it's tough to really get a sense of why, what that's going to look like, because turnover kills your profits, right? Like you have a little bit of vacancy, but you also have to go and at a minimum do some touch-up paint, do a deep cleaning. There's always expenses that come with turning over the property, even if it's a really desirable property that's going to re-rent quickly. I didn't even take I looked at these, but just on the video, I didn't go through the pictures. I mean, it does look like a pretty nice renovation. It looks like a desirable unit, like something. It makes sense that they were able to rent them up. Since they bought it and renovated it, and now are selling it to us. Oh yeah, and I didn't even mention that, right? That it is a core investment. I think that makes a ton of sense because this is in-place income. It's a market that appears to be a strong market. I think that this characterization of this investment makes a ton of sense. It is, when they're saying fully renovated, hopefully that means there's not much in the way of CapEx needed anytime soon. But again, we didn't get a full description of that. Man, sorry, I started to jump around a little bit too much. One of the things I was trying to do is compare, like, okay, if I was going to look at the Parker versus the Peterson, like which one am I, the Peterson looks like it's going to have a higher yield. They're in the same market. They're very close to each other. Honestly, I would much prefer a single-story property to a multi-story property when the units are like up and down. And I think that that's what we have here. I think that we have, I'm actually not certain though. If anybody knows the answer to that, I would love to know that. Is this property, are there upstairs units or downstairs units, or are they all two-story units with 4 exterior doors? I don't think that's the case. Let's see if we can see. No, I don't think we're going to be able to see it by taking a look here. We're going to find out. Let's see. Is that it? Oh, that's it. There we go. We can't actually see to be able to count the doors on the side. Oh, it does. Okay, maybe they are up and down units, and there's 4 doors because I can see at least 3. It looked like 1, 2, 3. So that actually makes me feel a little bit better. I don't ever like it when I have tenants living above or below other tenants. You end up having a lot of problems with that. People complain about the noise and whatnot. So that would be one reason to pick the Peterson over the Parker for me. I don't think that's the case here. Am I just going to pick which one says the highest yield? Well, I mean, both of them are, underwriting is always like we're making some predictions about the future that could be wrong. I don't necessarily think the differences are great enough for me to care. I do think I'd rather have 4 2-bedroom units, but there's some argument to be made to having a unit mix that has different sizes to offer, because over time, sometimes, but that's, having a good unit mix typically comes from when you have a larger apartment complex, and you're doing tons of new leasing all the time, having a variety of things to offer to people. Here, at any given time, you're hopefully not going to have all 4 units turn over around the same time. So I don't think that having a better unit mix. I think I'd rather have 4 2-bedroom apartments than have the studio and the 1-bedroom with this. So yeah, I think if I had to pick one, I'd pick the Peterson. Other than that, I mean, they're relatively close. I'm not sure, having this one that it says, okay, we already have it below appraisal. I don't think we had that information on the Carson. Yeah, we didn't. It would be nice if they would update that on here, though, because, yeah, here they just said below the seller's asking price. So it'd be interesting to see how we did on this one, if this one came in below appraisal or not. If it did, this would definitely be my choice. If not, well, and actually, this return, I think they're taking into account that you're buying it initially at a discount. Anyway, if you're buying either of these properties or both, I'm curious to hear why. One thing that I might want to do is just spread my investment across both of them if I'm not too concerned of having, a million K1 someday because I'm buying so many properties. But yeah, if you are buying this one, I'd like to hear about it and hear about why. Is this yield acceptable? Is your total IRR 10.7%? Does that make it worth it to invest in something that is, this new business model that Mogul is doing versus, is that really outperforming if I just put my money in an S&P 500 index fund or something like that over the long term? I'm not really sure that it is. Now, the difference is I'm getting some yield here currently. I'm typically looking for the properties that are giving me what I believe is an above market return. I've always been able to do that buying investment properties in real life. Over the last couple of years, it's been tougher when interest rates have moved up, but being able to use short-term rentals or pad splits has been a way to continue to get good returns. Now, obviously, on Mogul, the short-term rentals aren't working very well. They are some of my best performers on ARC 7, though, right? So, it's not necessarily just that model isn't working. Before I ramble too much about all that, though, that's just my question when I come, because I like this is a market I want to be in. It is, it's a long-term rental. There's not a lot of business plan risk, but is that yield in just the overall return? Is it just too low to be excited about this? Or, for example, if interest rates happen to come down, this is one of the things I don't really do very often, but if you ended up being able to refinance at a significantly lower rate at some time in the future, what is that going to do? What would that do to your returns? You'd see, well, I mean, it would help them a little bit, but one of the things that doesn't do, I guess you have to change. Because I was going to say, if interest rates go down, you would see a change in the appreciation rate. Because those things always work together, right? And so, is this? Yeah. So, I mean, I guess I can just use their bull case instead. There's the potential to do better, right? But it is one of the things I'm just not sure is how conservative they're actually being. And I do think, looking at the 4.5% growth rate over 10 years, maybe that's a bit much, but I don't know. I mean, it's a market that's fast growing. Anyway, I got way off track again. I'm really sorry. Obviously, the brain is not working amazing right now. If you are buying these, I'd like to hear about why. If you think that I've missed some big risks with these properties, maybe in the neighborhood, maybe some physical characteristics of the properties, maybe something specific to Colorado Springs, right? I'm not an expert in every market in the country, and so if it's not in San Antonio or some of the other places where I've been to and physically worked and invested in, there's always going to be stuff that maybe is peculiar to the location that I might not think to talk about. So please feel free to jump in with any of that in the comments or jump in the Discord and talk about it. That's it for me for today. Until next time, I'm going to just keep making mistakes so that you don't have to.